You might have come across news like this that Apple's market cap is higher than GDP of India. So this means that while India has a GDP of 197 lakh crores, which is approx 2.7 trillion dollars. So the question is, how is that a company or a single stock is able to beat the GDP of a country as large as India? So let's try to understand what is market cap and how it is able to beat the GDP of India. So let's try to understand the real meaning of market cap. Let me try to pose a very simple question to you. What is true about market cap? It is based on net profit of the company, or it is based on estimated or potential valuation, but not actual valuation of the company. It is driven by emotions of shareholders or investors with the company. Market cap moves up or down basis news, market manipulation, or insider trading. The answer is all of these. So market cap is not something which you can relate to GDP of a country, because GDP of a country is based on actual goods and services produced, while market cap is just based on valuations which are driven by estimation, emotions, manipulations, and whatnot. So market cap cannot be correlated with GDP of a country. With that being said, answer this simple question: which is bigger company? MRF with share price of 65,000 or ITC with a share price of 250 rupees? And let me know in the comment section if you have got it right. I know a lot of people would say that MRF is a bigger company, obviously because it has a market price of 65,000, while the ITC is such a small company, it has a market price of just 250 rupees. But if you look at Skinner.in, MRF has a market cap of 28,000 crores, while ITC has a market cap of 3 lakh 14,000 crores. So clearly ITC is a bigger company, but its market price is a lot less than market price of MRF. So we can conclude that market price has no correlation with the size of the company. It's the market capitalization which decides if a company is bigger or smaller. So let's try to understand what is market capitalization. Market capitalization is simply market price into total number of shares. So let's try to understand it through an example of ITC share. The market price of ITC is 259 rupees today, and the total number of shares is 1232 crores. So 259 is nothing but the price on a stock exchange like BSE or NSE. You have to pick one, and the total number of shares remains same, which is essentially the fractional owners of the company. So the total market capitalization of ITC is 3 lakh and 19,000 crores. You should only remember that market capitalization is nothing but tells you about the size of the company. So if you look at Skinner.in, market capitalization is nothing but product of current price into total number of shares. Now let's try to understand how you can use market cap while doing fundamental analysis of any stock. So market cap you should use only to compare similar companies, because a motor company can have a different kind of valuation as compared to a FMCG company. And the reason being, an individual can buy one car in his own life, but he is going to use FMCG products throughout his life daily. So always compare market cap with similar companies, with peers, and not with different industries. Now market cap also tells you about large cap companies, mid cap companies, small cap companies. So large cap companies are nothing but companies having more than 20,000 crore market capitalization, and companies having market capitalization between 5,000 crores and 50,000 crores are mid cap companies, and small cap companies have less than 5,000 crore market cap. Even the index of stock exchanges are derived from market cap. So if you look at Nifty, Nifty is nothing but top 50 companies on NSE which has highest market capitalization. Similarly, Sensex is based on market capitalization of top 100 companies on BSE. So hope you will be able to use this information in fundamental analysis to understand what is market cap and how it is different from market price. If you have any questions, let me know in the comment section. Thank you.